This is John Gilbert at Security First Asset Management with the weekly market update. Now, before we get into the weekly market update, I wanted to just announce a few different things that we have coming up. So we have our third quarter referral drawing that will be coming up here soon. And we also, next week, are going to be having an event at the Macon office. That is going to be over Medicare and health insurance. So Chad Payne, one of our advisors, and Emmy and Tapa are going to be leading a discussion and a presentation over Medicare. So if you have questions about that, if you're getting close to Medicare age, would just like more information, or perhaps you have family members or friends that are approaching that time in their life as well, please feel free to come join us at that event. If you would like to come, just give us a call at the office so we can be ready to have y'all, and we look forward to seeing y'all there. All right, so now moving on to market news. So last week, this is for the week starting Monday, September 16th, and to Friday, September 20th, when markets closed. So the big news in markets last week was the Federal Reserve's Federal Open Market Committee meeting. Now, leading up to this meeting, there was a lot of conversation as to how much the Fed was going to cut rates by. So it was generally accepted that the Fed was going to lower interest rates at this meeting. They had signaled that they were going to do so, but whether they are going to do a 1/4 percentage point rate cut or 1/2 percentage point rate cut was undetermined. So opinion had roughly been split. Now, going into last week, as the meeting approached, general consensus was leaning towards a 50 basis point rate cut, and that is how much the rate cut did end up being. So it was rates were cut 0.5%, or 1/2 percentage point, or 50 basis points. So this rate cut is larger than the typical rate cut. The typical rate cut or rate increase is done in 0.25% increments, or 1/4 percentage point increments. So it was larger than the typical rate cut, but it signals a critical turning point in the monetary policy and a commitment by the Fed not to fall behind the curve. So the Fed's proactive approach increases the likelihood of a soft landing, and as the projected string of rate cuts, that's going to lower borrowing costs for consumers and businesses over time, which is going to help growth reaccelerate in 2025. And so the chance of a soft landing is looking likely right now, which we'd love to hear. Just a reminder that the Fed has a dual mandate. They are not only trying to achieve price stability or keep inflation under control, but they also want to achieve maximum employment. So in recent statements, the Fed Chair, Jerome Powell, and other Federal Reserve officials have seemed to be pleased with the progress that inflation has made in coming down. And so they expect that to continue to happen. But now their focus has shifted from getting inflation under control to making sure that unemployment doesn't get out of control. In response to the rate cuts, stocks set new record highs, so markets reacted very favorably to the 1/2 percentage point rate cut news. From the beginning of the week to the end of the week, the Dow Jones Industrial Average rose 1.6%, the S&P 500 rose 1.4%, and the NASDAQ Composite rose 1.5%. Now, if y'all have any questions, or if you would like to attend one of our events coming up here soon, please feel free to reach out to us. We'd love to see you then. Thank you so much. Y'all take care and have a blessed day.